Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate jargon so you don't have to. Today we're diving into a report from Impax Funds. And let me tell you, even the name Impax sounds like something straight out of a sci-fi movie about robots fighting for market share. Get ready for a bit of a sustainability showdown. This report is an annual shareholder report. So in this video, we're going to look into which of Impax's funds did well, which ones didn't, and what it all means for the average investor. Did their funds actually create value, or are they just really good at marketing? Let's get to it. First up is the Impax Large Cap Fund. This fund invests in big companies, the types that are in the S&P 500, those you've probably heard of. It's worth over $1 billion. The report says the portfolio had positive results in 2024, but it didn't do as well as the S&P 500 index. Apparently, the stocks they picked weren't the best, and they were underexposed to firms with big AI exposure. The report also mentions sector allocation, meaning what parts of the economy they invested in, was negative as well. What about the costs? The report states that a hypothetical $10,000 investment would incur $105 in costs for the year, which is almost 1%, 0.98%. If you had invested $10,000 back when the fund started in late 2016, you'd have around $27,000 now, according to the report. The fund is listed under the trading symbol PAXLX. Next, let's move on to the Impax Small Cap Fund. This fund invests in smaller companies, which are often seen as riskier but with higher growth potential. The portfolio is worth over $725 million as of the report date. The report says this fund actually did better than its benchmark, the Russell 2000 index. The Russell is another index that tracks smaller companies, so beating it is a good sign. Stock selection in financials, healthcare, and industrials drove performance. What hurt them? Missing out on information technology stock gains due to a lack of megacap exposure. The fees for this fund are a little higher. A $10,000 investment would cost you $123, or 1.15%. If you invested $10,000 in the fund in 2014, the report says you'd have about $18,600 now. This is symbol PXLCX if you're interested. Now let's check out the Impax US Sustainable Economy Fund. This one focuses on American companies that are supposedly helping to build a more sustainable economy. We will check how sustainable those returns look like. The fund did good in terms of profits, but actually underperformed the US market. The report also states they had challenges in Q4 from sustainability tools headwinds. What exactly does that mean? Let's just say it wasn't a smooth ride for this sustainable fund. A hypothetical $10,000 investment would cost $78, or 0.71%. Back in 2014, if you had $10,000 with this fund, the report shows about $29,000 today. This one is PXWGX. Next up, the Impax Global Sustainable Infrastructure Fund. This fund invests in global companies that focus on owning, operating, developing, or distributing sustainable infrastructure-related products, services, or assets. The fund underperformed global equities. Apparently, this was due to being underweight in US and megacap tech stocks, where most of the gains were concentrated. It was also impacted negatively by the possible implications of another Trump presidency. A $10,000 investment would cost $86, or 0.87%. Starting in 2016, a $10,000 investment in this fund would now be worth roughly $17,300, according to the report. The ticker is PAXDX. Moving on to the Impax Global Opportunities Fund, this one seeks growth by investing in companies they believe will benefit from the transition to a more sustainable global economy. The fund underperformed, blaming performance lagged mostly on financials and information technology holdings. What went right? Holdings in the industrials and healthcare sectors had good relative performance among holdings that deliver energy and resource efficiency solutions. A $10,000 investment would cost $127, or 1.23%. It has trading ticker PAXGX. Now let's change it up with the Impax Core Bond Fund. This fund invests in bonds, which are generally seen as more stable than stocks. Their goal is income and to protect your money, not to get rich quickly. But good news, the Core Bond Fund performed better than its benchmark because it allocated cleverly. They picked the right securities that generated profit. A hypothetical $10,000 investment incurred expenses of $72 or 0.72%. A hypothetical $10,000 invested in late 2016 is now worth around $10,845. This bond fund goes by the trading symbol PAXBX. We are now heading over to the Impax High Yield Bond Fund. This one is all about getting high income, but it's also got more risk. They invest in junk bonds, which are bonds from companies that might have trouble paying them back. But that also means they pay higher interest rates. This fund outperformed the benchmark as well, thanks to selecting the right securities. Their overweight to healthcare and insurance helped performance. A lack of energy made it go down. The portfolio is constantly managing the allocations of certain sectors to seek maximum return. The fees for the high-yield bond fund are lower, costing $96 per $10,000 invested, 0.93%. A $10,000 was worth a little bit over $14,300 by the end of 2024. This fund goes by the trading symbol PAXHX. They also snuck in some fine print about a redemption fee for frequent traders. Finally, let's talk about the Impax Sustainable Allocation Fund. This fund spreads its investments across other Impax funds. It's like investing in a little bit of everything they offer so that it gives you a slice of everything. The fund did not do as well as its benchmark index. The main reasons were exposure to international stocks and stock selection. What worked? Not investing in the energy sector. This is the cheapest fund, with expenses for a $10,000 investment clocking in at just $31 or 0.3%. Its ticker is PAXWX. So what does all of this mean? Well, these reports have some important certifications and are signed off by Edward Farrington, President, and Daniel Saltis, Treasurer. Both the President and Treasurer affirm that all financial reporting is accurate and up to standards. So let's take a step back and take all of these into account to give our analysis. In general, many of the funds underperformed their blended benchmarks. The common theme here seems to be that what works from an ESG lens hasn't worked for generating market returns. On the one hand, some of the bond funds had decent results and low fees. These key fund statistics can help the investor make the right decision. Overall, Impax Funds has some clear strengths. Their commitment to sustainability is admirable, and their core bond fund and their high-yield bond fund can be a solid addition to your portfolio to offset risk. The high fees on the small cap and global opportunity fund might make investors want to second-guess their decisions. If you are interested in any of the Impax funds, make sure you consult with a financial advisor before investing. And that's it for today's corporate decoding. If you found this helpful, please leave a like and subscribe to the channel for more financial deep dives. Also, please let me know if you'd like me to decode a specific stock in the comments below. I'll see you next time.